Hello there, my name is Enoch. Taking care of your health should be a top priority. Looking at the various engagements that we have today, it is so easy to forget about our health, mental well-being. That is why we introduce to you the Healthy You Talk Show, a brand new show that is going to address matters concerning your health, nutrition, stress management, mental health, name it. We bring to you a wide range of experts who are going to be touching pertinent issues concerning our health. Tune in every Tuesday at 10 a.m. live on Faith Today TV.
Mountain Moving Faith. This is my latest book. And if you want to learn how you can move mountains, life has many mountains. While this journey, you will encounter mountains and you wonder, how can I move mountains? This is a book to read. And it took me time to research, to pray, and to wait on God and look at the scriptures and what Jesus talked about moving mountains. And this book is quite a story, it's quite an inspiration. It is quite something that will change your life. So order your copy today. We can send it to you wherever you are in this country. We will be able to send this book to you on Mountain Moving Faith. Call that number or send a message and our team will be able to ship it to you wherever you are. There's a book to read. You can also buy for your friend, for a family as a gift. And I have no doubt they will thank you and they will be always thankful for what you have done for them. So God bless you as you read this book, Mountain Moving Faith.
Welcome once again to Kingdom Business Network. We're so much glad that you're watching, and we thank you for continuing to follow this program and to also engage with us. We do not take it for granted. We just want to talk to you and to listen to you, and we also want to bring you the best that is available in the business world so that we can be able to help you grow your business and also grow your finances and also grow as a person. Today we want to discuss matters finances. We want you to be helped in areas of mastering your finances, and we want to show you how you can get started in the stock market. And to help us unpack that is a guest who was here last week, Mr. Tony Alang. Welcome very much, Tony. How have you been?
Thank you, Dr. and thank you, Victoriana. Thank you, ladies and gentlemen. It's definitely a pleasure to be back with you once again. I have been very well. Today we've had the blessing of rain this morning.
Yes. Welcome once again.
Asante.
He's the author of a wonderful book that I love very much. Maybe you can talk about it, and I'll also give you some time to continue to talk about it. This wonderful book, Eeney, Money, Meeney, Money, and More. Today I hope I've gotten it right. You need to read this book. It will give you a lot of information about how to handle money, how to make money, and you need to get this book. Welcome very much, my co-host Victoriana. You can introduce yourself to the guests and the viewers.
Thank you, Dr. Mungai. To Tony, welcome once again. It's really a pleasure having you on the show. And to our viewers, karibuni sana. It's great to have you tuning in from wherever you're watching from, whether it's Facebook, YouTube. Please remember to continue liking and sharing with your friends so that this knowledge can spread far and wide even as we continue to grow in mastering our finances. As you've heard, my name is Victoriana Alwang'a, and I hope you get a lot of takeaways from today's session. Thank you.
So what is your expectation today about stocks?
My
Are you an
expectation
investor
about
yourself?
stocks. I have not delved into the stock market particularly. Maybe in MMFs like what we discussed last week, but for stocks I've been a bit skeptical.
Yes.
Because should I say the assumption or like myths and misconceptions are that it's a dangerous zone to get into. So I'm hoping that from today's session, I'm going to get a different perspective.
Wonderful.
Yeah.
Tony, is it dangerous to get into the stocks? Maybe let's start from there.
I'd like to invite Victoriana not to be shy, especially now that we have unpacked some nuggets regarding how to do your investing. Just to recap a little, the last time we drew a pie and we talked about the various segments of that pie. We talked about cash and treasury bills, or MMFs for those who are interested in a collective investment vehicle, and that we have addressed. We also talked about the equities or the stocks, which we are going to address today. We also have the government bonds and the other fixed income assets, which we are going to address, I believe, in our next session. And we also have immovable property. So today, we are going to see how the previous discussion we had ties into the discussion we are going to have today.
Yeah.
Thank you. Thank you.
Okay, you didn't answer the question. Is stocks dangerous?
Oh. Well, there's a risk and reward with all the assets that we are looking at. And given that we have what we call volatility and market cycles in the stock market, and investor sentiment, you could have the asset value of your stocks going up, and you could also have the asset value of your stocks going down. So to answer Victoriana's question, the stock market is not a dangerous place. What you need to know is how to walk into that asset class.
You need to be informed.
You need to be informed.
Because I also know a lot of people who have actually made a lot of money through stocks. Some of them have been in the papers here in Kenya. I don't want to mention names.
Yes.
Some people have made a lot of money from Kenya Power, Kenya and ETC.
Yes.
Currently. In times past, there were many other stocks which made people a lot of money in the country.
Yes.
There are some stocks which were being split one for 10 some years ago. Internationally, you have people like Warren Buffett and many others who are known to have made their money from stocks. So what I would want to encourage our viewer is that be informed, don't be scared, don't be intimidated by stocks. Just have the information and the knowledge that we are going to discuss today. And this will actually help you make informed decisions and profitable decisions. So everything money, I believe you really need to have the information for you to be able to make money out of financial investments.
Oh, yes.
So let's start with what exactly are stocks and how do they work?
To put it simply, stocks are a part ownership in a company. So when someone says they're going to buy stocks or they're going to buy shares, what they're actually doing is they're buying a piece of the equity in that company, equity or a piece of what they can consider ownership in that company. Yes.
So you buy a piece, and what does that entitle you once you have that? What does it mean?
What it means is that you now become an owner, part owner of the company, and you're referred to as a shareholder. And what that entitles you to is certain privileges that you owners in companies are entitled to, which includes you are entitled to get dividends, which is a share of the profit. When the company declares a profit, you are entitled to attend company events. There is at least an annual general meeting that you'll get an invitation to every year, which is a huge privilege. You're also entitled to access day-to-day information about the goings on in the company. How are they selling? How are they complying with the market requirements? How are they competing, or how are they faring in a competitive market? And of course, you're also entitled to look at their audited accounts, both current and previous. Mm-hmm. And those are some of the subtle things that you'll be looking at the point when you're getting towards investment. You'll also be very keen on their stock price at the time that you're making your purchase.
Maybe at this point, maybe you can elaborate to the viewer. Does every company sell stocks, or when do the companies sell stocks, and where do you get the stocks from?
That's a very broad question.
Yes.
It's a question with many questions. So I'll try my level best to simplify it. So what tends to happen is that when a company has gotten to the point where they are considering expansion, or they are looking for money to do innovation, or they want to adopt new ways of doing their business, they may look for an opportunity to raise what is called capital. Mm-hmm. And the Nairobi Securities Exchange has been designed as the platform through which shareholders or owners of companies can then come out to the public and invite them to participate in whatever efforts they are trying to engage in to move the company from where they are to the next level. And the easiest way for them to do this is to float shares and invite investors to bring in their money, so that this money that they collect can then be used for expansion or for engaging in innovation towards growth of the business. Okay. So that is broadly how companies get involved in the stock market, and how they engage with the public to assist them move their business from where they are to the next level.
Okay. Are there different types of shares, and what are they? And maybe you can elaborate how one can participate in each one of them.
There are different types of shares, yes. We have ordinary shares, we have preferential shares, we have convertible shares, we have bonuses and equity. So what most of us are familiar with during our engagement with the Nairobi Securities Exchange are the ordinary shares. So an ordinary share is what will enable you to contribute towards the activities of the company's capital raising, and it may also be the platform through which you can transfer value and ownership from one shareholder to another in the smooth transition of ownership. So with an ordinary share, you are entitled to earn bonuses at the end of the year, if and when the company declares bonuses. And you're also entitled to the other privileges that I had mentioned, amongst many others earlier in the program.
Like voting.
Like voting, yes. When people are voting for directors, you are also invited to come and cast your vote, which is a very important process for companies. Mm-hmm. Yes, Dr. Mm-hmm.
So you talked about common or ordinary shares or stocks. Yes. There's also the preferential shares.
Yes.
Let's focus on those two. And what's the difference, and what do they mean?
For an ordinary share, you basically own a piece of the company, mm-hmm. as we have mentioned, mm-hmm. and it then gives you the privileges that we have presented. With the other types of shares, there may be instances when the company is seeking alternative ways of raising funds. And they then say, we are going to move you from category A to category B. And in the event that we run into headwinds, then your prioritization order in terms of obligations that the shareholders or the owners of the company and the company at large will have will be granted first to those who are considered in the preferential category before any other obligations will have to be dealt with. That's the basic difference between an ordinary share and a preferential share.
Okay.
Yes.
Victoriana, what's your take about this?
I think for me, I have maybe one question. You've talked about the privileges or the advantages that come with owning stocks in a company. You've talked about the voting rights and getting to attend AGMs, but I've not heard you talking about like the big decisions in the company, the decision making. So where does that come in? For which type of stock exactly?
So we probably went a little faster than we should have in the discussion on the stocks. So we have talked about the board members, and when the board is running the company by creating policies, these policies are then handed down to the executive team. And the executive team will then engage in the day-to-day running of the company. So as a shareholder, you will not get involved in, the nuts and bolts of the business. You're granted a privileged position. Yes, you can engage with the management. However, the day-to-day running is delegated to the management of the company. So this is an extremely good position, especially for early and beginner investors, to be able to understand what it takes to run a business. You will then get to understand the company's profit and loss statement, what a company has to do in order to make a profit and ultimately distribute a dividend to you as a shareholder. So you as a shareholder will not get involved in the day-to-day running. You'll be given a privileged position from which you can contribute either through the board, through engagement with the board, or at the general meetings that you'll have with the management team.
Okay.
Yes.
Okay, let's look at the stock market. How does it function? What is its role in the economy?
The role of the Nairobi Securities Exchange is for mobilization of capital, mobilization and allocation of capital. So both for businesses and for government as well, capital can be accessed and allocated through the NSE, largely in the form of debt and in the form of equity. So today's discussion is on equity. But we can highlight on the side of debt. So a company can issue a corporate bond where you say every so often we will entitle you to, so much in investment return, and at the end of the period of the corporate bond, we will then give you your investment back. We also have green bonds, government bonds, and recently there is a fractional bond product which the NSE introduced, which is called Emakiba, which then allows investors, more retail investors, through use of their mobile phones, to invest as little as 3,000 shillings to be able to invest in government bonds. That's why we are calling it fractional investment. Because we know that, based from our previous discussion, that you will require at least 50,000 shillings to buy a bond directly. Then we have on the equities market or on the shares market, we have what we call the main market segment. And the main market segment, I believe, is what today's discussion is going to be largely about. I'll just touch on the others and then come back to the main segment. So you have the alternative investment. You also have the growth enterprise market. You have the real estate investment trusts and the exchange traded funds. So if we go back to the main market segment, we have 62 listed companies that are actively being traded. And of these 62 companies, they are structured by market sectors. So you have commercial, you have technology and mobiles, you then have construction, amongst many other classes. So they're classified based on where your area of interest or your area of investment would be. And based on that, these companies can then access capital from the public, and the public can also, and this is the beauty of stocks, you can also trade your stocks. And in the process of trading or buying and selling your stock, you can enjoy the benefit of your dividends as well as appreciation in the value of the stocks that you've purchased. So that is how investors in the stock market tend to benefit from their participation in the stock market. Yes.
Now that you've talked about the NSE, Nairobi Stock Exchange,
Yes.
Might be there's a viewer there who is asking, how can I get into the NSE? How can I buy stocks? How do I get started?
How do I get into this market? And how do I buy and sell?
Yeah.
So the entry requirements are a passport photo, you need your national ID, and you need your PIN, KRA PIN. And you will get to open what is called a CDS, or a central depository account. And this CDS account can be opened for you by either your stockbroker or by an investment bank. So you have to go through one of the listed stockbrokers or investment bankers to then assist you open an account. Once your account is open, you can buy stocks in batches of 100. So you can buy 100 stocks, at least 100 stocks in your preferred counter, and subsequent batches of 100. So you can buy 100, 200, and so forth. So the entry requirements are 100 units or 100 shares times the unit price of the stock that you're buying as a minimum entry requirement.
Now I've opened an account.
Yes.
And I have 62 companies to choose from. What will help me not lose money? How do I make that decision? Where to get in?
I think this is where Victoriana's question and observations come through.
Yeah.
So in our previous section, we had talked about the importance of an investment advisor. And as we have also mentioned, the stock market tends to go up and down in a cyclic fashion. And even in those up and down cycles, you have what you call volatility. So it may be going up a little, and then there's some volatility, it continues going up, and then it comes down, and in between, there's that up and down movement. So a basic understanding of the company, we had talked about being able to make a decision on your asset classes. So even this company that you want to put your money in, you need to do a little homework on this company. Their audited accounts are posted online. So you're able to see how their performance is coming from one year to the next. Are they growing or are they shrinking? Then you could also look a little bit at the prevailing market conditions. How is the bonds market doing? So there tends to be a correlation between the bonds market and the stock market. When the bond prices are going up and continue rising.
That's government bonds.
Government bonds, yes. The prices of the stocks tend to go down because the investors might feel that investing in the government bond has less risk. So people tend to migrate their capital from investing in stocks to investing in government bonds. So you have to understand how the seesaw in the macroeconomic situation is working. There is also what we talked about, the collective investment schemes. So even within the collective investment schemes, just like the money market fund for the money asset class, for the equity class, we also have equity funds or stock funds. And I would highly recommend a stock fund for somebody who's shy of getting into all the details about the stock market. So we had said you can figure out whether it's 1,000, 5,000, 10,000, however much you want to keep putting every month or every income cycle. And what you do, instead of struggling to choose the stocks,
Yourself.
You just put them in this collective investment vehicle called a stock or an equity fund. And because this fund is run by professionals, they will save you the pain of having to go through all the fundamentals to then decide which of the 62 stocks to purchase. It is actually a lot of work. For those of us who like to get our hands on the ground, you actually do realize it's a lot of work, because you have an ideal point of entry and an ideal point of sale. So if you look at the market today, a lot of the listed companies are about to post their annual accounts. Most companies, especially the banks, start posting their accounts around March. So once they post their final accounts or their audited accounts, then they'll also declare their dividends. So at that point in time, there's a lot of excitement and people start rushing in to buy. And what does that do to the price?
It goes up.
It pushes the prices up. So if you are already in, there are two things that are going to happen in your favor. You're going to have, hopefully, a dividend coming, and on top of that, the value of your investment is also going to increase. So the question for you is, are you going to hold this stock for the long term, or are you going to cash in and take advantage of your capital gain? Yes. So that's a little overview of how the stock market works.
I think before we take the break, I just want to mention that we have these investment brokers who also really do help in terms of investment decisions. I've seen one who I buy shares through, who actually sends me weekly bulletins on how the companies are doing on the Nairobi Stock Exchange. And since I do it personally, I do the investment in stocks personally, and I actually am able to look at the growth stocks, value stocks, etc., and make a decision on where to invest. So you can elaborate to the viewer. For example, if you are doing it personally, individually, what are the growth stocks and what are value stocks?
So you've correctly mentioned that your stockbroker is one of the investment advisors you could also rely on. I also get daily reports on the market performance on my phone. Every evening by around 4 o'clock, I already have a report. So if you are active in the market, you will already be getting this kind of activity on your phone. I think 2 days ago, I got a notification that there are 2 companies that have already started the process of, towards declaration of dividends. So these are some of the subtle notices you will be getting. The challenge when you're doing it yourself is that you have 62 companies you're looking at. You have different market segments. The segments are moving at different times. Some stocks are going down when others are going up. So if we look at the growth stocks, these are the companies that are giving sentiment towards expansion. And there's a very high likelihood, that this market is expanding and there's opportunity for capital growth. So those are what we would be looking at as opportunities for growing our investment. And these are generally bought for long term. So you buy them and you hold them for the very long term, knowing that this market segment or this particular counter in the market is going to appreciate in value. Yes.
And the value one? The other one was value.
Value stocks. Yes. You know that there are certain stocks which will always give you a good return. And based on advice that you'll be able to see, and these things actually in the business pages of the newspaper, there's a very nice summary. Every morning when I open the newspaper, that is the page that I go to. It will show you all the details, including the 52-week high, the 52-week low, so you can tell where you are in between or at the peak or trough. It also shows you what the anticipated return on your investment is going to be. So these are the values that you actually want to look at. These are stocks that will actually give you good return. Yes, in terms of your dividends as well as potential capital growth on your investment.
Thank you very much, Tony. We are going to take a short break, my dear viewer. And when we come back, I would want you to have sent me the questions that you want to ask Tony. Tony will address all your questions so that you come from a point of knowledge when you are coming to handle the matters investing in the stock exchange. And as we take this break, also make sure you like, share, and subscribe, especially if you're watching us on YouTube. Thank you and God bless.
Thank you.
Okay, asante. Nilikisajili kitabu ambacho kinaitwa 7 Keys to Success, ama kuna kanuni funguo 7 if you like it, ambazo zitakuletea ushindi na kufaulu maishani. Wote, wewe na mimi, tunataka kufaulu, lakini pia kuna njia ya kufaulu. Ukisoma hiki kitabu ambacho nilikiandika kwa kufanya utafiti, kwa maombi mengi, kuangalia neno la Mungu, I have no doubt ya kwamba hiki kitabu kitabadilisha maisha yako. Nilikuwa naongea na mchungaji rafiki yangu akaniambia, nilisoma hicho kitabu, sasa ninafundisha watu wangu kupitia ujuzi, maarifa, hekima ambayo nilipata kwa hiki kitabu. Kwa hivyo unaweza pia nunulia watu wengine, na akaniambia alinunulia hata viongozi wake na wamekuwa wakisoma, wakaweka kwa library yao wanasoma. Hiki kitabu sina mashaka, nina uhakika itabadilisha maisha yako na utabarikiwa. Tuma message ama upige simu kwa hiyo namba na naweza kuwasiliana na wewe na utapata hiki kitabu, utatumiwa, usome na ubariki pia watu wengine. Asante. Mungu akubariki unaposoma 7 Keys to Success, and you will succeed. Thank you.
Hello there, my name is Enoch. Taking care of your health should be a top priority. Looking at the various engagements that we have today, it is so easy to forget about our health, mental well-being. That is why we introduce to you the Healthy You Talk Show, a brand new show that is going to address matters concerning your health, nutrition, stress management, mental health, name it. We bring to you a wide range of experts who are going to be touching pertinent issues concerning our health. Tune in every Tuesday at 10 a.m. live on Faith Today TV.
Welcome once again to KBN, Kingdom Business Network. We've been discussing matter stocks on how to get started in the stock market, and specifically for the Kenyans is at the Nairobi Stock Exchange. We want you to master your finances to make money work for you. One of the reasons why I love stocks is because it's a passive income stream that you can be working and your money is employed elsewhere in the stock market. So if you can't be able to master how to go about it, you can be able to invest and make some money silently with minimum effort. The risks are there, but you can actually make some good money. And before the break, we had some questions to Tony, and I think Victoriana will continue with that.
Yeah, thank you, Dr. Mungai. And I'll just take it back to what you've mentioned on risks. Tony has explained to us what to do to create the account, the different ways, like getting into an equity fund or doing it by yourself. And so now we are aware of how to get into the stock market. But now my question comes. I believe that there are some risks that investors should be aware of in the stock market. So what are some of these risks, and how can we mitigate them?
Okay, I'll go back to something we've covered quite well in Eeney, Meeney, Money and More, which is your investor profile and your appetite for risk. Because there's also a correlation between the risk that you're willing to take and the return that you're then able to earn. So higher risk, higher return, and moderate risk, moderate return, low risk, and considerably low return.
Returns.
So when you look at stocks now, you're looking at items like liquidity risk, that the company you're investing in may run into liquidity challenges and not be able to meet its obligations. Inflation risk. The macroeconomic inflationary challenges may affect the company you've invested in. A good example is where the prices of the inputs that you use to produce your end product are progressively increasing in price over time. Then you have credit risk. Yeah, is the company you're investing in able to meet the obligations to their lenders? That then poses another challenge to you. Economic risk, investment risk, market risk, interest rate risk, because with the interest rates going up and down, if you've borrowed on a floating interest rate, or the company that you're investing in has borrowed on a floating interest rate, then their obligations also increase if the interest rates go up. You have market volatility risk, which we were talking about earlier. Political risk. The political cycles also have an influence on the market cycles going up and down. So policy risk, these are government policies. Any abrupt policies by government could also have an impact on the company you're investing in. Currency risk. If we are operating in Kenya and the Kenya shilling loses value against the US dollar, for example, which is an international trading benchmark, then the company you're investing in could also face sudden challenges. You have the business risk, which is the day-to-day operations of the company. How are they conducting their business? And are there any risks in there? Those are some of the things you could look at as an investor. Pricing risk. How is the company you're investing in pricing its product in comparison to other players in the local and international market? Yes. And then you have poor corporation governance and concentration risk. So if you take all your money and put it in one company and you have 62 others, you are exposed to what is called concentration risk. So even within the stocks or the stock category or the stock asset class, it is recommended that you could do some diversification. Yes, so you don't put all your money in one stock. You could put your money into 3 or 4 stocks at a time, so that you enjoy the benefit that the market cycles might not be interfering with all your 4 counters at the same time.
And I think that's why they divide the stocks into different classes, like what do you call this? Like technology stocks, etc.
Yes.
So you can pick some technology stocks, some banking stocks, etc. So that if some factors that will affect, let's say, banking, then your technology stocks are not affected, and vice versa.
Oh yes, that's a very important point. If you look at the categorization right now, the energy stocks have been performing very well in the last few months. And you just alluded to it, that people who invested in, say, an energy stock,
Kengen,
Kengen, Kenya Power, mid last year, they've gotten 4 to 6 times their return based on how you timed your investment. You have the banks, which we talked about, the banking sector. You have the insurance, you have commercial and allied. You have also Telecommunications. Yeah. Our largest company by capitalization in the stock market is in the telecommunication and technology sector. So these are ways in which you can distribute the risk that you're exposed to as an investor. And investing in a stock fund addresses a large number of these risks for you just because they are being run by professional investment professionals. Yes.
Are there key benefits in investing in stocks?
I would say if you really want to put a rocket on your money, the stock market is one of the places that you need to be. Because with the stock market, you know, if you're able to get sound advice and be able to time the market, you are enjoying the benefit of capital gains in addition to the benefit of dividends. So, and all this is passive. You just wake up in the morning and boom, this thing has happened. The money is made for you. So all you need to do is to know, am I holding or am I cashing out? And at what point in time am I entitled to a dividend, so that even if you're cashing out, you don't lose on your dividend. Yes.
And just to take you back, when we started, Dr. Mungai talked about having information. And even as you've been talking about the risks, you've talked about diversification, which brings me to some of the mistakes that investors usually make as they get into the stock market. So one of them, you've talked about not putting everything in one basket and being informed, but are there other mistakes that we make when we're getting into the stock market that we can avoid?
There's one thought in investment, especially when you're investing in stocks, that if you're buying stocks consistently, say you're buying 5,000 worth of stocks every month, that you can buy stocks whether they are up or whether they are down. But as long as you're buying it at every consistent month end, you're going to get what is called a general weighted average price, which is not going to be too high or too low. And then there's another school of thought, and there are many schools of thought. I'm just giving you two basic comparatives. That your money can be parked somewhere. And last time we said it can be parked in a money market fund.
Market fund, yes.
And you're monitoring the market cycles up and down. And we also talked about the stockbroker and your investment advisor telling you that this stock is on a 52-week low and it is poised to give a good dividend. Put your money in now. Can I put a bid in for you? And you then tell your stockbroker, put a bid. And at this point in time, the only way that the stock price can go is up.
Yeah.
So this is where now you enjoy the benefit of capital gain plus your dividend. Yes. So it's definitely an avenue through which to multiply your investments in a very, very convenient way.
And I think one of the mistakes that a lot of people have done, especially in this country, because I have followed the market for a number of years, is following the wave that people are putting money here. So you just go and buy because that's where people are putting money. Instead of looking at fundamentals.
Yes.
And fundamentals, I'm talking about looking at indicators like the PE ratios, for example, looking at dividends, history, looking at how well is this company being run, how profitable is it. So when you look at the fundamentals of a company, you'll hardly go wrong. But if you just follow the wave, then you'll be in trouble.
So Victoriana had actually asked it in her previous question, that what sort of mistakes do people make? So following that wave, yes. So in the book we are talking about developing a contrarian approach to investing. When people are selling, you can see it as an opportunity to buy. And when people are buying, you can see it as an opportunity to sell. So when you develop a contrarian approach to investing, you find yourself on the opposite side with the rest of the market acting in your favor. That's generally how it works. So the mistake a lot of people make with stocks is they buy when the stock price is up, and then they sell when the stock price is down. So you actually end up with capital losses. That's one primary mistake that people make with the stock market. Yes.
Okay.
Let's take a few questions from the viewers, and if in case a viewer there has not sent his or her questions, please send them now. We want to take the next 15 minutes or so answering those questions. Starting with Neema from Thika, I want to continue with the questions you were asking. Neema from Thika is saying, my mom is saying stock market is like gambling. And I want to tie that with where I'm a bit scared of losing money. Are there minimum risks to this while still making good returns? If you could take those two questions.
In our previous sessions, we talked about the FinAccess report, saying that half of investors rely on family and friends for their investment decision. And you find yourself in the situation where the biases that the person you're relying on will influence your investment decision. So when you use an investment advisor and you use sound investment principles, then the stock market becomes a beautiful place to put your money. The reason why we were saying that your money market fund should always be there is so that you don't get caught up in an emergency and all your investments are in the stock market and the prices are going down. So your money market fund will be sitting pretty, waiting for you to assist you in the times of emergency, irrespective of what is happening in the stock market. And this is the beauty of diversifying your assets and your investments. So with regards to gambling, I would suggest that a good investment advisor or a professional investment advisor will be able to address that challenge, and they will actually be ready to start making a lot of money on the stock market. There was another question.
The other one was, I'm a bit scared of losing money. Are there minimal risks to this while still making good returns?
So for an entry-level player in the stocks space, I would also highly recommend a stock fund. So that you don't get caught up in the emotions around whether you're going up or you're going down. All that is handed over to an investment expert, and that investment expert makes sure that they do the best so that they can give you the ideal return that you're entitled to in that market segment. So going into a stock fund will relieve you of a lot of the challenges of tracking the market. Yes.
Somebody saying, thanks for the insight. What's the best strategy for someone with a full-time job who can't monitor stocks all day? Maybe just repeat.
Yes,
Cover that.
Stock funds. And there's a very important point there, and you highlighted it, Daktari, that you've been monitoring the stock market for several years. So for you to develop investment wisdom, you need to be aware of the data. Where is the market today? Where was it yesterday? And where is it likely going tomorrow? And where is my stock today? Where was it yesterday? And where is the trend going? So after you've monitored the market for some time, you are almost able to tell whether the market is going up or down. So it would be wise, before anybody gets involved in investing in the stock market, identify a company or a set of companies that have philosophies that you can align to, and start studying them. Look at who the managers are. Look at the audited accounts. Look at the corporate action section in the NSE website. How much have they been paying in dividends? Are they consistent with their dividend payments? To a point where you can almost see where your dividend payment is going to come in the subsequent year. So once you start developing a lot of this information, and you can now almost see what the predictions are, even from your standpoint, and this company is aligned to your personal philosophy, I would say just seek the wisdom of your investment advisor and say, hey, I have spotted something in this company. Is it a good counter to put money in? And they will probably tell you, you've spotted the right things. So the other thing about investing in stocks is when the prices are going down, that is the time to hold. A lot of people, when they see the prices going down, that's the time they want to sell. So that's the challenge that we have in the stock market. Making the wrong moves at the wrong time. So you can seek investment advice and a lot of that will be addressed.
So somebody is asking, who is best suited for stock market investing?
So here we are going to your investor profile.
Yes.
And how much risk you're willing to stomach. Especially for young investors, the stock market is very highly recommended. And then you can dilute your holding in the stock market as you advance in age. However, if your appetite for the investing risk is actually high, you can keep holding your stocks, because the beauty of the stocks is that if you have good investments, they will keep paying you dividends,
yes.
which is very sweet and passive income. And stocks are also fairly liquid. You can easily trade them through the NSE, and that is another reason why stocks are very, very advisable. And we said if you are not comfortable doing it on your own, identify a stock fund. Yes.
Can I also add that also people who have a long-term financial perspective, that means they're not in it for the short term, would stocks fit that profile?
Most definitely. This is why we are saying those who are younger, for young investors, because we are seeing that the investment horizon is long. Yes, and it's into the distant future.
Okay.
The general assumption is that companies are going to continue growing. And the longer you hold the stock, the assumption is that its output and its profitability are generally going to increase over time. Yes.
Morning, Gerard here. How do I protect myself from scams or bad investment advice?
Yes, getting qualified investment advisors, that is definitely one. The scams on the stock market, what you need to do is ensure that you have your CDS account set up and that you have a registered investment banker or investment broker trading in your stocks for you, so that you don't send money to someone who cannot execute on your behalf in this regard. So you can just check on the internet, do a quick search saying registered investment brokers or registered investment bankers. And then you'll get the list of CMA certified and CMA registered service providers.
Is it the same? Can you also Google this equity funds, or are they the one and the same?
Oh yes, even the stocks that are available, you can visit the Nairobi Securities Exchange website and they are all listed there. Even in your newspapers, your daily papers, you'll have all the lists of the listed companies in there, and even by the categories, you're able to pick from whichever category you have a preference in. And there are those who have certain philosophies that will not allow them to invest in certain companies. You're also able to then tell how that company operates and that this company is aligned to my philosophy. And all those things you are able, if you look at the company websites for a few minutes, you'll be able to pick some of the subtle details. Mission, vision, core value, and even if you look at some of their subtle details like ESG, the ESG policy, how are they handling environmental matters, how do they handle staff matters, you know, those are some of the subtle details that you'll be able to pick from policy level on their website.
Somebody is asking, I just started working and want to invest, but I don't have a lot of money. Can I get started? Steve in Highview.
Oh yes, Steve is in a very good space, I think, at this point in time. Last time we were talking about money market funds, which can double up as an opportunity fund an investment fund in itself, and an emergency fund. Once Steve has gotten an MMF account running, then we can recommend that he considers diversification to include what we are now calling a stock fund, so that he can enjoy the benefit of having both an MMF and a stock fund. Yes, and then as his ability and investor profile allow him, he can then also spread into more asset classes. Yes, so Steve is very welcome. Thank you for expressing an interest to start looking into the future.
And we said you can actually enter the stock market by buying only 100 shares minimum?
Yes.
And might be some of them, if it's being sold at 2-3 shillings, that's how much? Actually 200 shillings.
200 shillings, yes.
Because I know there are some shares at 2 bob.
Oh, yes.
Others at 30, 40, whatever.
Yes.
So the minimum of the minimum is 200 shillings.
So his stockbroker will guide him. Once they have opened the account, he needs his passport, his ID, and his PIN certificate. And then the stockbroker will guide you on how to engage with the market.
Okay.
Yes.
Someone is asking, hey, can the stock market completely crash for us to be aware?
So we are assuming that in a normal situation, or as all remains constant, that the stock market is going to deliver on positive returns, because we are looking at the companies being stable. These companies are regulated, yes, and they have to comply with the regulations. So adverse effects also have to be declared by the shareholders. So things like profit warnings have to be issued in advance. The shareholders cannot or should not be surprised that something adverse has happened and the management did not advise them. So for all the 62 listed companies to crash simultaneously, that sounds like a complete catastrophe. Yes. So the likelihood of that occurring is very small. I would say very small. Yeah.
Okay.
Yes.
So thank you very much, Tony. We are coming to the tail end of this program today, and I would want to take some parting shots, one from Victoriana.
Thank you so much, Dr. Mungai. Thank you so much, Tony, for those insights. I can say from when we started, my perspective has changed, and you've convinced me. So I know from here, I'm going to continue with my research on the stock market and begin, like you said, in an equity fund. So thank you so much for those insights. I've learned a lot today, and for our viewers, I know you've also learned quite a lot. And we are looking forward to having you next week, same time, so that we can continue with more discussions on how to master our finances together. Keep it locked on KBN, continue to like and to share with your friends so that we can all grow together financially and in business.
Thank you very much, Victoriana.
Yeah.
Tony,
Yes.
You can tell the viewer about your book and also some parting shots and where they can even buy that book, because I think they need to read this book.
Yes, Eeney, Meeney, Money and More is what you would call a guide or a companion that will walk beside you throughout your journey on decision making with regards to your financial planning and your investments. It will open your eyes to many of the things that have hitherto not been very clear, and the content in this book has been localized. So we are talking about the local market and how you can invest locally. So this is to a very, very early investor, or somebody who can be considered a beginner investor, a very useful tool, and it will help you to plan and travel on this investing journey over the long haul. We know that in the absence of a plan, it is a plan to fail. So this is your companion. You can get it at Nuria Bookstore. The book is available on Amazon. It is also available on tonyolang.com. How to save and invest 70% of your income. Thank you.
Thank you very much, Tony. We're so much glad to have hosted you today. These insights are wonderful and mind-blowing. What I would want to tell the viewer as my parting shot is that every investment has a risk element to it. And when you concentrate too much on the risk, you'll never be able to get started. What I would encourage you is get started. Yes, be informed. Look for the information like the information we are sharing with you today and know how you can mitigate your risk. There's always a risk-reward dimension to every investment that you get into. And some of the investments we are talking about, the money market funds last week, and now the equity funds and stocks today, are actually areas whereby you can actually start investing with the very, very little money. And my expectation and my hope is that as you put in the small money, then you are able to then start to understand the market, because now you are in the market. So you'll take more notes to information, bits and pieces, and you'll be able to grow your knowledge and understanding of the market that you've gotten into. Today, if you were to go and sell potatoes or tomatoes in a normal market, I can assure you, you'll go in there and you'll be surprised going back with your tomatoes. Why? Because there's been somebody who's been doing that for the last 10 years who knows the ropes better than yourselves. So get started today and start to understand how it operates, and that will be able to calm you down. It will be able to give you the better perspective and understanding of a market. And with the time, I can assure you, you'll move from investing hundreds of shillings to millions of shillings. And with that, God bless you very much, and continue watching Kingdom Business Network. God bless.